Hey up everyone, how's it going? And welcome to the first video on the technical analysis part of our edge of the strategy we use, using different components to mark up charts to help us identify where we want to enter and exit the market. Um, so we're going to start off with ranges and what is a range and how do we identify a range, and yeah, then there'll be another video we'll go a bit more into depth on the power of the range, power ranges, and in other videos we had to start integrating them a little bit. Well, we had to start integrating them a lot with other parts of the strategy, other components. So obviously each video will be on different components, and then I haven't decided which chapter yet, the second or third chapter of the course. We'll start putting them all together, and then that's our game, that's our edge. That's where we're ready to go. So breaking things down now, let's get our charts up. We're going to start off with the introduction to ranges, and what is a range, basically. So, what's a range, Martin? I don't know, mate. Right, so you have like three stages in the markets. Okay, you either have there's more supply than demand, more people selling than more people buying, like here, just going down, or have more demand in the market, more people buying. It's like here. See these green pushes? Or we'll have a range where there's like an evenish amount buying and selling, evenish amount of supply and demand. These kind of areas we want to avoid trading within, because it's kind of hard to pinpoint which way we're going. And we want to be trading when there's clear momentum one way or the other. If you watch my tennis analogy video, I refer to it when there's like someone's clearly like serving, they're in control. We're going to back server. We want to back. So in this move here, we'll be backing supply, and we'll be selling with them. In these moves here, we'll be backing demand, and we'll be buying with them. But in these moves here, there's no one really to back. No volume. There's no movement in the market. So we'll be sitting on our hands and having a cup of tea, chilling, back testing, studying, reading, doing whatever you do. Yeah, but we do like identifying ranges. One, it helps us to know when to stay out of them, and two, we'll go into the next video talking about what it actually costs to break out of a range, and that is showing strength, and it's those areas of strength that take our interest. But anyway, let's start by identifying ranges, because there is a way that we mark them up, which is very like clean set rules. Kind of, some people could say, well, this is a range, but then there's a bit of supply and control at the end here. Does it break out the range here? Does it break out the range here? It can be quite subjective. Objective? One of those words. And yeah, we got kind of clean set rules to just be like, no, that's what it is. And that's what we're going to play from. Actually, before we go on to that, I said we don't usually use indicators, but there is a little indicator I like what helps us identify ranges. So we'll quickly set that up as well. So we'll go to indicators. It's called the inside bar. Inside bar. Spell that right? With the rest of them, mate. There we go. And we want the inside bar with bullish and bearish colour. Click on that, and she'll come up underneath the euro/US dollar here. Right, turn the eye off. T2 there already. So keep your eyes on these two candles here. Turn it on. See how the bodies have been filled, like black and white there. And that's because it's letting us know that these are inside bars. Okay. And what an inside bar tells us is from this on a 4 hour here. Within this 4 hours, there was more supply than demand. Then the next 4 hours, this low wasn't taken. The supply has slowed down, okay? But it also, the high wasn't taken. So there hasn't been any real strong input of demand either. So if there's no strong supply or demand, what are we doing? We're ranging, right? So an inside bar tells us when it's ranging, when its price has stayed within the low and the high of the previous candle. Ranging, no momentum. And actually does it on the next candle too. So it's always relevant to the one previous candle before us. And this candle fails to break the low of this one. It also fails to break the high. So there's neither supply or demand like serving in control in the market. And so instead we're ranging. We're on that third option. It's really important to note that we're only ever in one of three moves in the market, either supply, either demand, or we're ranging. There's nothing else, and we want to identify which phase we're in. Okay, so then the next candle, no body, it's a full purple body. That's because it breaks the low of this candle. So now there's more supply than demand. Next candle, more supply. Next candle, even though it's green, it still breaks the low. Doesn't break the high. Previous candle breaks the low. More supply. Next candle, more supply. Yeah? So we'll actually carry on from this to help us mark out a range. And we're basically going to keep following this until the next candle does not break the low. Okay, so supply is now kind of slewed down. Get our horizontal bay out. Magnet. Get the bottom of that. Paper in again. Blue, bottom. I want it to the left. There. We'll save it. Oh, I've already got it saved. Cool. Then we're going to go back to where this started, the high of the range, but it's hard to. I'm not going to explain why I'm making this the high for now. This will become very apparent once we actually learn how to mark up the ranges. Just from the naked eye, that's the high. All right. Find out why. Save that. And it's high. Clean that. Cool. In fact, let's do bar replay. It's probably going to be so bar replay. Click up here. Wherever we click, it will take us back to that time without seeing any data in front of us. Kind of cool little tool for the eyes to help you see in real time. So we'll go to. Yeah. Oh, I'm doing basic. Oh, it's wow. Okay. You know what? I'm going to switch over to my account because it's a good tutorial kind of tool to use the bar replay. You still do this without bar replaying, just go through price action. But I do recommend treating yourself to the pro if you're starting to take trading seriously. It's definitely something we'll need in the future, I reckon. But I'm going to pause and then I'm going to flip over to my account and carry on. Where are we? 25th September 2200. Wow, cool. Cool, we're back. It feels like home. Nice to see my colours back. If you watch the Trading View tutorial, see now where we can customise your colours exactly how you like it. Put your colour in here. I've got my Wimbledon green. Add. It will come up down the bottom here in green, purple. Anyway, need that. Nice to see friendly colours. So bar replay. We're going to take it back in time to here. Okay. So now supply is kind of slowed down, yeah? Demand's come into the market and it stops like supply's momentum. Okay? You can say that there's an evenish amount of supply and demand in the market. We're going to find out, we're going to wait to see which breaks first, either this low or this high. Okay, so the low breaks, right? So what that means is within this range, supply kind of outweighed demand, and continues her move. All right, so we're going to mark this. Every range is going to either be part of the edge here. Range isn't just a range, like who was in control going into that range, more importantly, who's in control going out of that range. Right, it's either got to be supply or demand. Right, so we want to mark out what type of range this was. Because supply has broken out of it, all this price action here becomes a supply range. Right? We're gonna get our rectangle. Hey, first tool. Gonna hover over the low, right? Then we're gonna find the highest point of this range here. Control click on that. Drag it across to where we broke. If your rectangle looks very different, it's because this is a little bit customized already. Double click it, style, border. Okay, so my supply candles are purple, yeah? So I have my supply box purple, background purple, and I have it very light as well, like at 5%. If you have it at like 100%, we're going to have very bright boxes all over your charts. So just keep it light. Keep it light, man. In the background, I have mine as 5. I hope you can see this on recording actually. But yeah, we got that light purple supply range marked out now. And template, save as, got mine saved as supply range. Cool. Okay, now this is where we move our high, and it's to the high of the range, right? See how already it's like a fixed structure, fixed rules. You'll see a little bit more as we go along now, but I also use ranges to help us identify what trend we're in. Like trends can be very, I've got to think of this word, subjective, objective. I don't know what the word is there. Like one person can see if you come from different strategies or you've seen charts and trend lines and stuff before. Like, you know, a trend could be that line, and we're breaking out the trend, or someone else might have it marked as that. We haven't broken out the trend yet, depending how far back you go. I've traded trend lines and stuff before, years back, and I just found it very but what's very opinionated. And I really like this because when you start getting a few kind of ranges in a row, and this is on all time frames, we'll be touching on in a minute. And when you start linking them, going all the same way on all the time frames, that's when we can have a pretty clear indication of what trend we're in. You know? Anyway, it's getting excited. That's like video 2 stuff. Let's carry on with just marking out ranges. Okay, so we got a new low. And that low is taken out again. I was a bit quick. High still up here. Is that broken? Hover over it, gives us the information. Looking for the L here for low. Low 358, 379, so it didn't break the low. See it a bit there as well. Now we're starting like a new range, right? Demand's slowing down, coming in. Wow. And demand pushes long, so it breaks the high. Okay. Now demand is serving. These little candles here come demand range. Broken out. Mark the high. Going to mark the low. Drag it along where it broke. Move these across here. These candles here. It's basically telling us that we can see that since this new range was formed, there was more demand than supply, and it finished with more demand than supply. So therefore, this is a demand range. Double click. Again, customize it. I recommend to the same color, whatever you've got your demand candles as. I have mine is green, very light. Again, videos to come. This is a strong area because we've had a supply to demand range flip. Just starting to feed in some terminology here. But don't worry about it, we will be explaining that very shortly. Right, so we've got a new high. Low stays the same, still the low. Oh, no. And we just keep going until the high is not taken out. Now, if this is kept going, low will stay the same until we get like a pullback, until demand doesn't break the previous high. See how this candle doesn't break the previous high? Now we're back into range. We're not going to say that supply is serving now. Just because this is a big supply candle, it's coming from stronger demand. We're in a demand range. Even though there's supply, in this candle there's more supply than demand, we're not going to be selling. If anything, we're still buying. Right? Demand is still serving. Even now, 2 supply candles in a row, we're in a demand range. We're looking for buys. Okay. Even now, we demand, and there we go. So demand hold serve, create a new high, create a new demand range. Cool little trick. Press Control, hover over your rectangle, and it copies it. It copies whatever you've got clicked on. I don't know. Selected. And then we're going to go to the high, find the lowest point of all this range, which is here. This across. You have a new demand range, which also creates a new low. We go to the low of the range. In case you're coming from anywhere else, strategies, we're not going to the low of the trend, low of the candles, whatever, it's the low of the range. Don't usually actually mark these out. Kind of see this by the naked eye with ranges, but for tutorial's sake, it's quite handy. Again, takes out the high, so demand's still sending it. Takes out the high. Okay, what do? We've got a new high formed. What's going to break first, the high or the low? High. Cool. So we're going to get our rectangle, mark it to the high, find the very lowest point of this new range. The range is from whenever this high was created onwards. Okay, it's not going to be back here. This candle, once we get the first pullback, this is the new range we're created. First point is there. Push. New low. Happy days. Well, I don't want to make these videos like too long because there is a lot to it, and we're going to have loads of opportunity and loads of eyes on marking up ranges and all that good jazz while explaining things as we go along. So yeah, and we can see now, look, we've got demand range, demand range, demand range. Some people could be seeing that this is like, you could have like, not to confuse you here, I'm just trying to explain what I got confused in the past with trends. So this is nothing to do with this age or strategy. I'm just kind of trying to explain how I like these kind of fixed rules. We can have like supply trend line here. Be like, even though this is a pullback, still trending. You could have like that as a supply trend line. This is like our trend here. That before, people could be like, oh, we've broken out. I just like the no subjectivity object. I've got to figure out that word. I'm confusing myself here. But just this is just clean cut. Okay, we've got demand order flow. Happy days. And we do this in all time frames, pretty much from the 15-minute upwards. Okay, and don't really go below. It's just too many range flips and stuff. But for weight, the higher the time frame, the stronger the weight. We mark up ranges from 15 minutes upwards. Noisy. It is. I've done before. There you go. I've already had the 15-minute ranges marked up. This is my home. then, please don't be noisy, please don't be noisy. Yeah, sweet. We integrate it with 4-hour ranges. You can integrate it with daily ranges. We integrate it with a weekly range. Yeah. Okay, so on here, for example, again, this isn't to confuse you or anything. I'm just trying to show why we mark them up. Daily, oops, daily ranges. So it'll be like here. This is a daily range. We're in a 4-hour demand range. Okay, so on the daily, this is a green demand range. On the 4-hour, this is a green demand range we're in. And on the 15-minute, we're in a green demand range. There'll be places like this we'll be looking to buy because we'll be seeing that we're bullish. There's more demand than supply in the market on daily, 4-hour, and 15-minute now. We kind of put them all together. It helps us identify like real strong trends. Cool. I think I went a bit off grid there towards the end. Let me go over my notes. Yeah, we're either supply, demand, or we're ranging. We got our inside bar. Help us look. Inside bar is on all time frames. There's that candle. It fails to break the high and fails to break the low. Got our inside bar here. Wanted to customize it. Came up with anything different. There's the colours there. New settings. Marking out a range. Covered. We're going to be doing plenty more, and I'll be drawing a diagram to go with this video as well to help explain more detail too. Yeah, it's either a supply or a demand range. It's just not a range. It's like, okay, who was in control going into that range? More importantly, who is now in control moving out of that range? And yeah, it's apparent on all time frames from the 15-minute upwards. So that will do on our introduction video to ranges. I hope that's making sense for everyone. Thank you very much for watching. Enjoying these videos, and look forward to the next one. Cheers, guys. Happy trading. See you in a bit.